Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 11, 2022. Let's take a look at Snap. Snap is a social media company, and of late many of the social media companies have come down drastically and now they're trying to bounce back. Look, Snap has got 5 different platforms: Map, Communications, Camera, Stories and Spotlight. And Snap is very famous among millennials and younger generation. Let's look into this company and see if it's worth buying up here. So with that, let's jump in. Look, from a leadership perspective, we got leader Ivan Spiegel, and look, he's got 90% approval rating, and this rating has been improving of late. So that's why management perspective, it checks out. Ivan Spiegel knows what he's doing. He's slowly but consistently improving the company's financials and company's sales growth. So with that, let's jump in. Look, any social media company, they got to improve their daily active users, and Snap is doing it consistently. Look, daily active users is improving at a nice clip over the years. So this is very important for any social media company, and look, this company doing it. And as you look through here, we got North America's in yellow here. That's slowly improving, but not in a great clip. But look what's going on. They're improving the Europe nicely. Europe is accelerating nicely here, and more importantly, the rest of the world is accelerating at a nice clip. So that's where I think they got to improve both Europe and rest of the world. Then business will be solid. All right, let's look through here and see what's going on here. Look, we got North America. We got 24% penetration. Lot more penetration to go here. They got North America has got around 400 million smartphones here. Europe, on the other hand, there is a more addressable market here, 560 million smartphones, and this company is just starting the penetration here, 15% penetration so far, and this company can do a lot more. On the other hand, rest of the world is a nice opportunity for this company here. 2.5 billion smartphones, and Snap is just getting started here. Look, it's just 6% penetration so far, and they can do a very good job here. So this can improve the company, and it can get the company to somewhere near to what Facebook is as this company improves. So with that, let's look into more details here. Look, Snap, it's a camera company, as they say, and they got various platforms, and it's very famous among millennials and younger generation. Right now, stock price is around $35, as you see here, and stock has done great back in 2021, and in 2022, as you can see here, it has a little bit come down. As you can see, this is due to earnings miss, but off late it's getting a nice consolidation level. It's trying to bounce off of the consolidation level, and look, right now it's a moderate buy. We got 20 analysts saying go buy the stock, and 8 say hold, no sell. So that tells you analysts are warming up to social media company. And Snap, because Facebook is or Meta, as we speak, it's got some not so good reputation. That's where Snap can come in, and they can really do well. And from a news perspective here, we got we had a drop back in April, but investor place thinks the drop won't last. It's a good company to buy, and this company, Snap, it's also one of the good stock when it comes to metaverse. It just bought a company in France which is specialized in metaverse and neuro. I think that's a very good acquisition. So with that, let's jump into this stock in a little more detail. All right, so from a price target perspective, Snap right now, look, it's a $35 company, and it's about a $57 billion market cap. And, it's down 24% from year to date. And right now, the lower target for the stock is 36, which is above the current stock price, and upper target is 93, and mid-level target is 53. It's a squarely bullish from an analyst perspective that reflects in the analyst rating here. It's a buy rating right now. From a technical perspective, it's a sell right now. It's trying to improve as we speak. It's going into sell. I can see it moving to neutral and going to buy as we go forward. That's why it's a contrarian type play here. Stock is down, and right now it's bouncing, as you can see at consolidation level, and trying to bounce here. That's why it's a good play to slowly start accumulating and buy the dips, as we say. All right, so from a numbers perspective and a snapshot perspective, look, company started back in 2017. And year to date, it's down 24%. And right now, price is $35, and market cap is $57 billion. It's becoming a big company, as you can see here. And look, they got nice volume here, 21 million shares traded. That's very good. And it's kind of trading along with the S&P 500 1.07 beta, and analysts recommend buy. So it looks like it's overall company-wise, it kind of checks out here. More importantly, the reason I love this company at this time is, look, they got nice sales, $4 billion, very good sales growth. Look at this sales growth, 42.4% sales growth here. And year-over-year sales growth is also good here, 46%. 5-year sales growth is great, but look what's going on here. Next year sales growth is nice, 37%, and this year sales growth, and next year sales growth is also very good. So that's why these companies are doing well. They're giving nice projection for the future also. They raised their outlook. And from an earnings per share perspective, look, this year is 51%. Look, for the next year, they raised the earnings target here, earnings per share, 91%. And next 5 years growth is 62%. That's why, analysts are really bullish about this. Company raised its outlook for the future. Very few companies can do that. From a price to sales ratio perspective, it's a little pricey, not too pricey, but I think it's understood in the social media and internet stocks. And from a financial perspective, look, price to sales ratio, debt to equity ratio is there's a little bit, it's below 1, so it's manageable very, very much. And they got a lot of cash, $3 billion cash and $2 billion debt, which is manageable given the debt to equity ratio is 0.7. They got a lot of money. Look at the quick ratio and the current ratio. They can easily meet the short-term obligations. And right now, as we speak, the cost of debt is very low. I think they got very cheap interest rate probably. Cost of debt is very low. And they turned into free cash flow positive. That's good. There are not too many companies in this space with the free cash flow positive. And with that, let's look at the performance here. From a performance perspective, stock has been dropping in 1 day. It's negative, as you see here, last Friday. 5 days, it's negative. But if you look at the longer term, look at 2-year and 5-year, they've done pretty good here. And as you look through the technicals here, from a technical perspective, at this time, RSI, relative strength index, is 49. That tells you stock is oversold here. IV percentile is high. That tells you could even sell some put option below the stock price and make some money that way. And stock moves around $2.32 on an average in last 14 days or so. That tells you can trade in and out of the stock also. Put call ratio is around 0.93. That tells you folks are really buying call options, and they're also buying put options to hedge. And from a moving average perspective, in a 20-day moving average, it's above current stock price is above 20-day moving average, and it's also above 50-day moving average. Generally, it's a bullish at this time because it's above its 20 and 50-day moving average. And from a Bollinger Band perspective, it's in a 50-day, it's a middle of the band, and also 20-day, it's a middle of the band. So it's trying to improve, middle of the band, kind of neutral, trying to improve. So 1 month high is $39, which is above current stock price. 1 month low is 27. So on the down days, you can buy this safely. VWAP is 35 here, as you see here. That tells you stock it's VWAP 1 day slightly higher than the current stock price. That tells you stock wants to go higher. From an industry benchmark perspective, from a valuation perspective, it gets a 3 rank, which is very good. It's a good valuation, is low. And Morningstar perspective, it gets a grade A in growth here, grade C in financials. Companies still trying to be strong in the financial area. Profitability is grade A. That's also good here. So overall, I think this company is doing well. They're also doing well against their industry here, doing nicely against the industry. So with that, right now, as you look through here, we got net margin. Right now, net margin negative. That tells the company not making money yet. They're trying to improve here. With that, let's jump in here and look at the numbers. From a numbers perspective, look, the company is trying to improve its earnings per share slowly but quietly. Look, I like the clip here. Even though earnings per share is negative, it's trending in the right direction. Sales is going gangbusters. Look, sales is improving nicely. That's why I like this company. They're doing the right thing. And shares outstanding is increasing slowly, which is okay. If the sales is improving at a faster clip, I'm okay with slight increase in shares outstanding. Operating margin is improving, even though it's negative. It can turn positive pretty soon. I like the clip here. Same story with net margin. They're improving the net margin slowly. I can see them turning into positive net margin company pretty soon. And debt to equity ratio perspective, that's a little bit, they've taken some debt back in 2020. They're paying down the debt, as you can see here. That's also good overall. All right, now let's look at earnings history here from Seeking Alpha. From an earnings history perspective, look, they've been beating on the earnings per share consistently for many quarters. And look at the revenue here. They've been doing nicely from a revenue perspective. Back in 2017, it's a small company, very low revenue. But right now, they're more than $1 billion revenue here since last 2 quarters. They're consistently growing their revenue. That's good. And they're also growing their year-over-year revenue at a nice clip here. That's good. And last time the stock came down because look, they missed on the earnings last time. That's why the stock came down. It's they've done nicely this time around. So that's why it's a good stock to slowly buy here. Company is growing, as you can see here. Look at the revenue. They've been growing the revenue nicely in a nice clip here, double-digit revenue growth. That's a good story. All right, now let's look at competitive landscape. Let me just pull this little bit to the side here. From a competitive landscape perspective, look, there are big companies here. Look at the market cap here. We got bigger market cap companies like Google and Facebook. Snap is number 3, as you can see here. It's making nice growth, nice improvements. This was nowhere in the map, but right now it's the number 3 market cap in this social media. Very importantly, look at the sales growth here. It's growing better than both sales Facebook as well as Google here, with the nice sales growth here. That tells you top line is growing nicely. But the bottom line net margin, it's a negative right now. I can see this turning positive, pretty soon. And as you look through here from a performance perspective, look, so we have got Snap right here. It's been down, for a while here, but trying to slowly improve in a 10-day basis. I can see this continuing. And on a 5-year basis, they've done great, 73%. And right now, they're trying to bounce back from the lower levels. They got around $3 billion cash. That's good enough. And it's also free cash flow positive company right now, and nice financial indicated by Altman Z score. So that's why I think it's a good company to buy at these levels. And we got a few more companies here. Look, we got Etsy here. Etsy is not a social media company. It also has a good overall rating. Stock has been falling off here. And then finally, we got Yelp. Looks like Yelp has got nice rating here, 91. You could look at this company also, follows similar trend here. Looks like it's also trying to bounce back slowly. You could look at that one too here. All right, now let's look at the monthly performance matrix of Snap. Look, Snap, what I've done is I've looked at a couple of years here, 2022 all the way to 2017 when the company became IPO. And we got months here. We got December through January. And look here, last couple of months, stock has been dropping off, as you see here. January, there's a big drop, 43%. February, drop again. March, it's trying to improve. April is trying to improve slightly. You see here, it's trying to improve as it go forward. That's always a good story here. And look, last year company did not do well, down 5% the whole year. That tells you, it's a time for this stock to bounce back here. 2020, everybody sat home and did the snapshot. Stock went up higher. 2019, nice uptick here. 2018, this was the inflation year, and this company was not making money. That's why Wall Street sold this company big time. So this time, Snap is a different company. It's a net margin. It's a free cash flow positive company. That's why I don't think it will be as severe like last time, because this time it's a different company. It's a free cash flow positive company. It already dropped 30%. I could see it maybe dropping say 5-10% more, then it should start going higher. That's why I say buy the dips in this company. All right. Now let's look at the chart here. From a chart perspective, we got a 5-year chart here. Look, back in 2020, company did nicely. Everybody sat home and did the Snapchat. 2022 here, stock came down, look, and now it's trying to consolidate. Nice consolidation level here around 27, 28 here. Now it's trying to bounce off of its support level and trying to go higher. This is a 5-year weekly chart. And now let's look at a little bit smaller chart here. We got a 1-day, 1-year chart. If you look at 1-day, 1-year chart, you can see here nice support level here around 28, and it's trying to bounce off of its support. And momentum is improving, as you can see here. And right now volatility is also improving, mainly because earnings is coming up. Around the earnings, volatility increases. It's a good time for the daredevils to sell some put options below the stock price. And as you see here, we got DMI chart. Looks like there's some bearish sentiment here at this time. That's why it's good to buy the dips. And from a volume average perspective, right now as you speak, folks are wondering whether to buy or sell. Looks like there is some selling pressure right now. Smart money is flowing into the stock, as you see here. Nice check in money flow. All right, now let's look at Bollinger Band. From a Bollinger Band perspective, we got an upper band here, and we got a lower band. The stock is squarely in between here, hugging the middle band. This middle band can become the support level. It can try to go higher from here. So with that, let's jump in and look at one more chart here. This is a squeeze chart, TTM squeeze chart from John Carter. Look, stock has been down of late. It's a 1-day, 1-year chart. It's trying to consolidate, as you can see here. Nice consolidation level, as you can see here. As you look through here, we got a 3-day, 3-day chart here, same consolidation pattern. And keep watching what's going on here. We got, the yellow lines becoming shorter. We got a TTM squeeze, as we call it, a red dot here. That tells you stock wants to do something here. Given there is a tight compression, as you saw in the previous Bollinger Band chart, the Bollinger Band is becoming tight. It tells you there is some high volatility here. So at this time, look, short-term wave is on the positive side. Long-term wave is trying to improve. As you see here, there's a slight improvement in the curve here. That tells you it's in the early stages of bouncing, indicated by TTM squeeze, even though John Carter wants these lines to be above for the confirmation, but line is curving up slightly, as you see here. That's a positive indication. And DMI chart also indicates the blue line wants to go higher. That's why you can be contrarian here and take a position before the earnings. Look here, it's also improving. As you see here, the yellow lines are becoming shorter. Same story here. So you could slowly be a contrarian and buy the dip in this stock. You will do well. All right, now let's look at option chain here. From an option chain perspective, look, stock is at $35. At $35, we got here option chain. We got nice open interest here, 1.7 million contracts. Look, at $40, we got 3,000 open interest here. That tells you folks are buying the call options even at higher prices. Look, we got 44 and 45, nice open interest. That tells you in the option market, folks are buying out of money call option, expecting the stock to go higher. And similarly in the put side of the house, we also have some good open interest here, as you can see here, but not as much as call side. So with that, let's jump in here. From a put call ratio perspective, look, we got total 98,000 call contracts traded, 69,000 put contracts traded. That makes the put call ratio around 0.7. Less than 1 tells you there are more call options buying, and it's bullish when it's less than 1. All right, now let's look at the what should we do on the Snap here? Snap acquired a company that supports metaverse controlled by thoughts. Look, it's a futuristic acquisition here. The company it acquired is called NextMind. It's a French firm founded by a team of neuroscientists. So that tells you Snap has got its vision on the future. It wants to really go into metaverse in a big way. And it wants to help users to play the computer game by moving the cursor and controlling a lamp hands-free. Hands-free is always a good. Folks don't want to be attached to their computers all the time. So I can see Snap making a lot of progress in metaverse, using this acquisition, NextMind. And DAU, daily active users, which is a fundamental metric for any social media company, increased 20% year over year. That tells you this company is engaging the users very well. And fourth quarter revenue increased 42% and full year revenue increased 64%. That tells you companies earnings are improving, and free cash flow positive. Operating cash flow is as well as free cash flow, both are positive. That's also very good. And they also gave nice earning beat as well as guidance beat. That's also good here. Company has got nice expectation for the future. That's always a good one here. I suggest take advantage of this pullback and slowly accumulate Snap. You will do very well. So with that, thank you very much. Happy investing and trading. Please subscribe.